Good morning, traders. This is Sam, the Trader Geek, with your Sunday morning, October 19th, 2025 market review and preview for the coming week. Hope you're having a great weekend. And we'll start off by looking at some of the market performance over the past day, week, month, quarter, year to date to kind of figure out where we are. And so we saw Friday was a nice bounce back for the most part, but mostly Magnificent Seven were up about 1%. The Q's up 2/3%, and the SPY was up about 0.5%. VIX lost about 18%. They really crushed volatility from an intraday high of about 28.99. So if you look at where volatility was and where it came, I mean, it virtually lost 1/3 of its value from the peak pre-market about 3 a.m. Eastern time. But nothing crazy, but still not falling apart, still holding above that October 10th low, which we'll take a look at in a minute in the charts. Looking at the week, gold, ninth week up in a row, 5.36%. Micro caps doing well, and as they do usually seasonally, about 2.5%. Magnificent Seven about 2.5%. As was the QQQ. So that seems a little odd. I have them all three at 2.45%. I'll have to check that out. IWM 2.36%, though it was kind of weak on Friday. Mid caps up 2%. At the bottom of the list, Bitcoin not responding favorably to seasonal trends, down almost 9%. The VIX lost 4% on the week after that big down Friday on October 10th, and the dollar lost about 0.5%, and SPY was up 1.75% on the week. We look at the month to date, which is really also quarter to date. VIX up about 27%, not surprising when it was down at 15, and gold up almost 10%. Month to date, as well as the micro caps up 2.77, TLT long-term bonds or 20-year bonds up 2%. Bitcoin so far losing 7% month to date, and mid caps down about 1%. Looking at the major markets on a year-to-date basis, and gold is the runaway winner, of course, up almost 61%. VIX up 20% from year-end levels, and Magnificent Seven are up 18% combined, as is the QQQs up 18%. Microcaps 17%, and the SPY 13.5%. VTI is just a Vanguard total market index, so that's the place to go if you don't want to mess around with all the different types of stocks. I think it's about 2,000, 3,000 stocks in that one, 13%. GBTC, Bitcoin's still up about 12.75% for the year. The loser, of course, in these major markets is the dollar, down almost 6%. High yield bonds coming at the low end. So you can see most major markets are up on the year, and mid caps up 3.38%. Taking a look at sector performance on Friday, everything was up except the materials and utilities, as well as gold giving up a little bit of weakness to precious metals, down 4%. Telecommunications basically flat, as were retail stocks. Best performer was staples on an up day. So staples are starting to bounce a little bit back. Discretionary up 86 basis points, and energy bouncing back a little bit, along with the financials after a bit of weakness that we've seen from the financials. On the week, we can see that retail stocks up 3.82%. Real estate having a good week, 3.34%. Discretionary up 2.5%. At the low end of the range, we've got pretty much all sectors in the green for the week, which is kind of weird because it didn't feel like an all sectors up week. Financials just basically flat. Healthcare up 82 basis points, and the Energy stocks up 0.89%. XLB recovering about 1%. We take a look at the month to date, and we can see that XME still leading, with gold taking charge and still rallying, except for some weakness on Friday. XLU, the utilities, up 5%. XLV healthcare continuing to recover, up 3%. The worst is energy, down 3.75%. Financials losing 3% on the whole debacle with the regionals and kind of cockroach theory from Jamie Dimon. We've got communications down 3%, retail stocks 2.5%, and XLY, which is primarily a weakness in Amazon. Just don't get it. It's pretty much every time there's a headline on tariffs, Amazon is the go-to stock to short, apparently. And if we go sectors year to date, metals and mining, XME up 80%. The technology a distant second at 22.5%, and then IYZ telecommunications up 22.3%, and utilities up 21%, supported by a lot of the nuclear energy theme. At the bottom of the list, and again, all of these sectors are positive on the year, albeit XLE, the energy, is only about 37 basis points, and XLP, the staples, up 1.42%. So not bad so far. And if we take a look at the Mag 7, we can see that we have a mixed bag on a weekly basis, 3 up, 3 flat, and then 1 down. Amazon negative on the week, with Google the strongest, and as well as Tesla and Apple. Quarter to date, which is basically call it 2.5 weeks old. Google, Clubhouse leader, up 4%, and Amazon being the worst, and Meta not finding any oomph so far this month. I don't want to say weakness, but it's still holding above that $700 level, and Nvidia losing about 1.8%. But on a year-to-date basis, all but Amazon are up, which Amazon down 2.89%, and Nvidia the leader at 36.44. But look at Google, hot on the heels of Nvidia, up 33%, Meta 22%. The Apple just can't seem to get going and stuck around this 250 level. It's only up 0.75%, and even Tesla is approaching that 10% level. So a nice look for everything year to date, looking pretty bullish. So let's flip the switch over to the charts, and anyone who watches these videos every weekend knows that I look at the 3 time frames: the daily, the weekly, and the monthly time frame. And taking a look at the dailies first, you can see this wide range bar is really controlling. We get a close below, call it 65.50, and we could have further downside. We get a close above 67.62, basically the high of the Friday the 10th, and obviously we're not too far from all-time highs. But we had 4 days, 2 down, 2 sideways, and sideways to up. So we went nowhere last week, but although we did see that the SPX was up just a little bit last week overall, maybe 1.25% just now. But this is really this wide range bar, and you're going to get probably more choppiness until we decide a direction. You can see it Tuesday. We got within 5 points of the Friday low, but support came in. So this is a resilient market, even though MACD is pretty negative, and we're not at the 0 line, and we are kind of neutral on the relative strength index down here on a daily basis. So if what I'm looking at from my perspective is, first, do we violate that 65.50? Okay, then we probably have into 6,500. So what I see as the 6,550 is a could be kind of a neckline of a head and shoulders. There's one shoulder, head, and then another shoulder. Don't quote me on this. I'm no certified market technician, but 6,550 would be a first downside warning. But 6,500, we get a close below 6,500 for 1 or 2 days. That's below the 50-day. And we might see some further weakness. So I think 6,550, 6,500 has to hold here. Otherwise, we're coming down here, maybe to the 6,400 level, even to the 6,300 level. In any case, play what you see, not what you think. Looking at the weekly, kind of a doji. It's not like this doji here, but wide range bar, but not as quite as wide as the previous week. MACD is looking to flip negative, and we have gotten out of the overbought 70 level on the RSI, but still looks very bullish. And you can see I've already marked the implied moves for this coming week. We have, as we'll see, about $135 plus or minus possible move on the SPX. We're scheduled to get CPI, whether the government still shut down or not, on Friday. We'll see if that comes to bear, but you can see this green line here is the lower edge, 65.28, and the upper edge is 67.99 for this week. That's quite a bit lower than last week's expected move, which was 197 points, but still a big move nonetheless. Looking at the monthly, we do see a doji forming on the monthly, although nothing bearish about this chart. You can see the MACD is still positive, and we are still overbought on the monthly. You know, this is a monthly chart, so it moves a lot slower, but everything from the daily propagates to the weekly and then eventually to the monthly, at the risk of stating the obvious. But nothing here to scare me here. We have to see some more weakness. And I think we hold 6,500, then we're pretty much good. We break 6,550, we could have an easy 50 points to the downside, but so far, advantage bulls on everything here. Taking a look at the NDX, again, another wide-ranging bar and sideways action, and this could persist for a week or two while we try to resolve, are we going higher than the lower, higher than the high here, or lower than the low here? And so again, Tuesday we tried to hit that low, which was 24,256 on Tuesday, and we came within 50 points because the low on Friday the 10th, that was 24,207. So again, MACD is negative. RSI is pretty much neutral at the 55 level, and looks a lot like SPX, right? This little candle here, inside candle, and we have the MACD or the RSI just under the overbought level. What we can see, it got here, it barely got down to the 63 level before bouncing, and we're back at 67. So bulls aren't giving up that easily. Bull markets, especially long ones like we've had so far, don't give up that easily. And you can see here on the monthly chart that looks a little bit better than the doji that we saw on the SPX chart. And again, you can see here the lower edge of the expected move for this coming week, 25,193 and 25,442. We get up to 25,442, and then we're making a new all-time high. I'm not sure we're going to see that this week, but what do I know? We've got a positive MACD and, of course, a red-hot overbought relative strength index. And you know, this is a week after options expiration, lots of cross currents. The last 2 weeks of October tend to be a little bit more skewed to the downside, but nothing has really followed the script for seasonality this year. So to expect it to do so this week is expecting the unexpected, kind of expecting the unexpected of the unexpected. All right, but Russell 2000 was showing some good strength, and Wednesday made a new all-time high. And then on the regional bank news, you could see that a big reversal candle here kind of spoiled this little breakout. And then Friday, another doji. You can see MACD is definitely negative, though still significantly a lot above the um, neutral line, above the zero line, I should say here, and then the the RSI is at the 51 level, kind of neutral. Still showing a bullish chandelier stop and a bullish parabolic stop and reverse PSAR. So down here, but it just seems that when we have strength, the Russell is weaker, but when we see weakness, the Russell 2000 tends to be weaker. Again, but Wednesday being the exception here. Looking at the weekly, we can see a pretty big topping tail here, which did end up exceeding even last week's expected move. And our expected move for the Russell 2000 is 25.22 for this week. So that would be lower than last week's high, and then the lower edge of the expected move is right here, about 23.82 for the week. MACD is still positive, still close to overbought on the RSI, though less overbought when we hit the 70. You can see here that we didn't even touch the 70 level to get overbought on the weekly. And looking at the monthly, again, another topping tail doji, and you can see this is a nice chart after going down and then up and then down, and we're back up here close to all-time high. So we need to see, with the declining interest rates, the small caps to really catch a sustainable bid, because that's 2,000 stocks that we have working in our favor versus the S&P 500, which is 500 stocks, and of course the NASDAQ 100 is 100 stocks. So if we can get small caps in gear and staying in gear, maybe have a move like gold has had, then this market is definitely going for all-time highs and not too short a period. Taking a look at the VIX, and maybe I switch to a singular chart here, and that will look better. So we'll go over here and look at the VIX. You can see here on Friday, we hit the 28 level, and that was mostly in the pre-market. By the time the market opened, we were down to about 25, and then spent all day kind of crushing volatility, selling it away, which is odd and not so odd on an option, a monthly options expiration. But we did end at the lows after hitting 28.99 in the pre-market, and reflective of, and that's reflective of the rally that we had on Friday. But you know, we end up near 21, still in the 20s, still elevated, but this kind of explains the drop in the expected move between last week and this week. And if I switch to a weekly chart, we can see here that the week of the 10th, we closed at 21.66, and you can see this topping tail on the weekly. We ended up at 20.78. So we did lose some ground, as we saw earlier in the charts of the major markets, that we lost some ground in the VIX, but we're still at the 20 level, and that's slightly above average of the long-term average of 1950. But anybody who knows me knows I like to look at the option pricing, and we do have a weekly or a monthly VIX expiration on Tuesday. The last time to trade it is like 4 o'clock on Tuesday, but they do expire with the futures on Wednesday morning. So I'm not going to mess with those. Those ones have played out. Look at the monthly. we're at 20.78 on the close on Friday. Let's call that 21. And if we are still bearish on the market, let's say we go $1 out of the money, we want to buy a call, then we buy the 22s, and that would set us back about $2.29. And if we were bearish on the VIX and bullish on the market, we would go out and buy, say, the 20 puts. And so those are at 209. So the VIX option pricing isn't telling us a heck of a whole lot. And when I looked on this at Thursday, this was more neutral than anything, basically pricing about the same. Now calls are slightly higher than puts, which makes a bit of sense. So this is one data point, but it's not really telling us a whole lot, but it does give a little bit of an edge on this particular data point to the bears. And not the VIX bears, I'm talking about the market bears. If we take a look at the structure of the VIX, we can see that, all right, we closed, this is the futures, and this is the futures contract that is expiring on Wednesday morning and has 3 more days to trade. But again, the VIX options that are key to that contract do not trade after Tuesday. And the VIX is a cash settled instrument, so you can't get assigned on the VIX. But if we go out 31 days, you can see that it's slightly lower. Go out to 59 days to the VIX contract expiring in December, 20.76, 2150, 2174, 2181. So we're back almost, except for the VIX contract, the next 2 VIX contracts out, say 60 days, we are in a backwardation pattern, meaning that the near price VIX is higher than the next couple of expirations of the VIX all the way out to 60 days. So that gives the edge also to the bears. And then finally, what I like to look at is the VVIX, which is the volatility of the volatility. And we're looking at a weekly basis. I'm going to switch to daily. And what I say about this is when we're under 100, it's not something to worry about. And this is a measurement of institutional hedging. And but once we get over the 100 mark, and it's particularly over 110, this is kind of a caution sign that there's quite a bit of institutional hedging going on. So on Thursday, we closed at 134. And, to be still about 100 points within an all-time high and have 135 VVIX is really unusual in my mind. You have a 135 VIX, and we're more than a couple percent away from an all-time high. Of course, on Friday, they came in and crushed the VIX, and they came and crushed the VVIX. So we are still above that 110 get under your desk and rock back and forth level, but way below where we got, which was the 137 level. So anything over 100 says there's still some volatility to come. So nothing here says that we are out of the woods as far as volatility comes. How much downside we get, your guess is as good as mine. Unless we get I have an economic calendar here, but there really isn't anything to be had. But here you see some Canadian and British and I don't know if this is New Zealand or is this Netherlands, probably New Zealand. These are irrelevant. Everything here goes to Friday, and if they are going to push through with the core CPI numbers and the flash PMI, these must be some European times. I'm not sure what they are. Don't rely on them. I couldn't find a decent economic calendar out there, but the only real thing of any consequence, since there are no weekly jobs reports, are the core CPI if they come out on Friday, maybe a flash PMI. We will see. So, but for the most part, what's going to take center stage are earnings that are coming up next week. and we start things in earnest. And you got 3M on Tuesday, Coca-Cola, Netflix, Capital One, GM, Northrop Grumman. Wednesday after the close, you have Tesla and IBM. Those are two biggies, and not so biggie anymore. AT&T, Alcoa, Lam Research. So a lot of familiar names. GE, Vernova. That one's been a hot one. Come Thursday, we got American Airlines, Honeywell, Dow. I guess you could read all these Intel and Ford, kind of the biggies. And then on Friday, Procter and Gamble is the most significant here. But a lot of earnings. I think next week is the strongest or the busiest earnings week when we get a lot of the Mag 7. So this week, we're going to see Tesla, we're going to see Netflix. Those are the biggies in the tech space, and what they tell us will also kind of set the stage for the following week. So that's about all that I wanted to share with you on this video. What I would say is that with $135 expected move, you want to be cautious. And, if you're short-term trading, you want to take your profits and run. Moves aren't lasting that long, and whether to the upside or to the downside. And again, as long as we're in kind of the tractor beam of this wide range bar, unless we take out the bottom or the top, we're just going to kind of chop back and forth, and there's really less is more in this particular environment. $135 move for the week is nothing to sneeze at. It is a volatile with a 20 VIX. And, if we do observe seasonality, then so be it. Then to the end of October, early November, before we get our end of the year strength, we'll see that. But edge to the bulls all around, daily, weekly, and monthly. But volatility rule the roost. If you're doing option trades, I recommend that you do spreads rather than individual stocks, because the volatility crush, if any of you didn't experience that on Friday, and it continues and the VIX heads down to 17 or 18, those calls that you buy in anticipation of a bullish move will lose and have their volatility crushed really quick. So you don't want to be in them. All right. So my name is Trader Geek Sam. Hope you enjoyed this video. If you have any questions for me, at TraderGeek on Twitter, or I will see you in one of the forums that I'm in. Take care and see you next time. Bye-bye.